Good evening, everybody. My name is Kathleen Prokop. I am a student at the Grand Canyon University. My major program is Bachelor in Science in Finance and Economics. Right now, I live in Hemet, California. And like I said, my name is Kathleen Prokop. My topic is budgeting for your company using the marketing mix, the 4 Ps. First of all, when doing your budget, you need to set up your accounts. That means your accounting accounts, such as cash, accounts receivable, what else? Insurance premium, inventories, what else would other be? You need to look at your accounts chart and you need to try to pick up in there what are the 4 Ps. You need to try to organize the price, promotion, product, and place. So in each of your products, you are to set up price. In each of your place, like geographic, where you want your business, whether be online or a real tangible place or both. And also your promotions. Your promotions need to be your discounts. So how are you going to do your budget using the 4 Ps? First of all, when you are doing your B2B, that means business to business, you're dealing with your company to a third party advertising. You're dealing with your company, dealing with, I say that, accounting, auditing, your third party where your logistic, your distributor, and so forth. The suggestion for spending on promotion is 2 to 5%, as opposed to business to customer, depending on your geographic area and the product that you want to sell, services or merchandise items, is between 5 to 10% for the promotion marketing. So that's with the promotion. Now your product, you need to set up your goals for how much you want to get revenue. So if your revenue per month would probably be per week, if you're a small business person, let's just say you want to do 8,000 revenue a week. And you would say there are 52 weeks in a year. So then your revenue would be per year, your projection is 416,000. So with this revenue that you are projecting to get, you need to in there find your profit goal, your goal for salary that you want to budget for yourself and employees. you need to also get your raw materials, which is your inventory, or it could be your inventory capital. Or capital inventory means there's no assembly. It's all delivered to you logistically, like clothes, paper products, hygiene products, and so forth. Those are called capital inventory. The raw material inventory could be something to assemble, such as when you're buying gold, jewelry. Uh, you may have a assembly line where you put someone assemble the ring, someone cuts the diamonds and the gems, and then someone set the diamonds or the gems in the ring. Other raw materials could be assembly for potato chips. The you need to the flour. You need to make the flour to bake into to bake it. The For example, Doritos, yeah, powdered cheese. You need to know that. So those are called assembly line raw materials. You need to project how much it would cost you to buy those materials. Now, you need to be uh, aware and be down to earth on when you're projecting for 8,000 uh, uh, sales per week, revenue per week, you may have about 2 to 25 employees. Some might be working part time and some might be working full time. And you would have to have your warehouse employees. You have to have your, so if you have a capital, you need to try to, I say that, put it into category in the warehouse for delivery to your clients. Like, for example, you are wanting to uh, you have a small warehouse uh, and you have uh, maybe 5 categories: beverages, snacks, alcohol, uh, uh, produce like apples, grapes, paper products. So those could be your 5 inventory, and you're a distributor to. If you make $8,000, you have to allocate that. So that's like five, five, five. So if you were to uh, uh, you set a goal for one of your uh, category, 2,000, and another category would be 1.5 thousand sale, revenue, and the other one might be good for 500, and the other one could be 1,000. So how much is that now? 3,000, 2,000, 3,000, 4,000, and the other one could be another 1,000. So this would be your projected goal revenue for each of those 5 categories, and you would have to put that in your accounting and try to do a graph on trying to see which of your products are having more sales and which product needs to increase and which one you want to cut down. So you will try to project $8,000 a week sales. Now, your employee could be someone like your office helper. So you might have an assistant office and a manager, and you would be the CEO or president. So that would be three. Then you probably have drivers, maybe three. You may have people working in your warehouse, maybe 10. And warehouse people probably make about $17 an hour. So if you're, how many words you got again? 10 warehouse people. So 10 people times 52 weeks. That's 520 weeks for the 10 people. That's a year. And you were to pay them 300 a week. 300 a week. So that's 30,000. That's not much, huh? So let me see. 300 a week times 5. No, 300 a week times 52. That's, so let me see, 17 times 40. That's 680, huh? Times 52 weeks. So, and then times 10. We need to be realistic. So this, I think my calculator is wrong. We need to be realistic. I'm just projecting something. So you know that if you got 416, and you would first find out the cost of your items, and you would probably, I didn't calculate right away for the, so if that's 8,000 a week times 52 weeks, is that right? 4, so, well, according to my calculator, it came up to 416. Okay? So now when you get your 416, you try to divide that by your 5. That's a short one. Oh, you try to divide that by your, let's just say you try to divide that by 5 departments, okay? You would have your 1 employees, 1, 2, 3, 4, 8. So 416 divided by 8. So, and then you would go ahead and, so each of your products of your lead, is a capital of 52. Okay? So capital means per salary is 52,000. Per salary, per merchandise that you need, and so forth. So that's you need to get your per capita. Now, once you get your per capita, you might want to go and divide it some more. So this is just like a small quick way to give you an idea on your budget in your capital. Okay, so yes, sir. So now let me see. 416,123 divided by your 8 to get your per capita. So that's 52. You divide that by weeks. So there you go. Your expenses would be 1,000 per capita. So that's probably then you're gonna say, well, I want out of the 52, I want so this your I wanted that my expenses for my employees, his salary is let's just say 15%, and the salary for yourself is 5%. So, and your charitable is 3%, and your, let me see, so this is now 23% that goes to administration. Well, your salary expense is actually in production, but your administration expense, charitable. Okay, so let's just go 15%. 50% for, and then so the rest would be, this is just scenario, okay? That's where you have to have a live graph you can work on later. But just give it a template where you can work on your live graph later. So let's just say now that 100% minus 23, 7 and 7. So 77% of your cost will be your products. Okay, so 52,000 times 0.77. So you need to spend 40,040 for your merchandise. So how did we get that? You got $8,000, $8,000 a week, and you multiply by 52, and then you did a per capita divided by, how do we get our per capita? By 5, 6, 7, 8. Let's just say, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's just say 10. So in here it says, let me see, 41600 by 52. We divided by 8. So we have 8 categories, right? And so you say that, so 52, that is your per capita, times 77% goes towards your inventory. So that means you need to spend every year, what would that be every year? Let's just say 10. Every week, so you need to spend at least 32,032 for your warehouse. That's your items, okay? And you need to divide that then into your products. So you might want to decrease that some more because you might want to offer more higher salary. That's where you need to do a live graph. So that's how you would do a budget by using the 4 P's. But you have to have at least an idea on how to do your numbers, and you can just plug them in later, like I said. So, but you want to make sure that you have your goals to make every week, first of all, and your goal is $8,000, and you may have up to right now we're looking for 15 employees plus yourself, so that's 16 salaries that you need to think about. Some other part-timer, maybe the warehouse is 10, you might have 4 full-time there and 6 part-time. Oh no, you might want to do 4 part-time and 2 interns. You need to get involved with your service for the community. So, and then you might want to have a volunteer. So that's no payment, but it's a volunteer. But you need to your insurance for your companies. That's one more that you need to can think about. Your insurance for your lease. So that would be your administration. So you might have to increase your administration a bit. Buildings. Now that would be in your. There are 3 kinds of major expenses, which would be your salary expense, your inventory, could be your building, then the minor ones, which are your utilities, phone, and some of them in your minor one, because it's not so much, is your insurance. That's in the minor expense. So there are actually maybe 3 big in salary, inventory, and is it building? I forgot. Could be. And in the major one are utility expense, phone expense. Utility could include electricity, gas, and so forth. So and so forth. So you need to have also cash. You need to have your cash flow. When we talk about cash flow tells you exactly how fast you're liquidifying your inventory, how fast you're liquidating or paying your expenses, and how fast you're doing your finance, if you have like stocks and bonds and so forth. So let me see, what else can we talk about? Now, digital, there are three types of businesses. One business is logistic, which is actually B2B, and the other one is B2C, which is from distributor to customer, and the other one is both with the building and web page. Most company nowadays do both. Like even Target or Walmart, they have online marketing, which is called digital. Let me see. Amazon use digital and they have a warehouse, so you can either pick up your product in a nearby warehouse or it's shipped to you. And then there are all sort of advertising in the internet, digital. There's mobile, there's web development, email, social media, other stuff. So that's pretty much it on how to budget. Remember, the most important thing, first of all, is to plan your projected accounts, and then your projected income per week or per day. And so now you need to budget your salary you want for yourself, for your office assistant, for your manager, for your driver, for your warehouse. Okay, because you are doing a delivery service. Okay. So a good thing to do with your delivery is your distance of your clients. So you have to think of getting clients, one that requires routine and one that requires ad lib, meaning to say it's not a regular customer. Routine is a regular customer and they order so many things regularly to you. The non-regular customer, that's just probably give you an extra, a boost of income, which you might project additional $1,000 each month, between 500 to 1,000 each month if you want to do that. So you would projecting 8,000 routine and 500 to 1,000 non-regular customers. So remember to get your Office 365 business or maybe home office, and get your Google Chrome with Gmail. Those are free and they have all sorts of widgets that are application in Gmail. You could set a Gmail account business where you could have so many Gmails that you could use in your business with yourself and your employees. So now that this is all situated, good luck to you. Remember, per capita, and then just go ahead and do it live with your Excel or live with your sheet with Google Chrome, Gmail. Okay, thank you so much once again. My name is Kathleen Prokop. You have a good evening and good luck to you. Goodbye.